One of the most wonderful things of Asia is it actually changes faster than any other place I've ever been to. And it's really important in disruption to be the disruptee instead of the disrupted. So what it really means in an era of great disruption, you really have to be looking for those winners, and there'll be many of them in Asia, and positioning in those accordingly. Their valuations will continue to gap versus the disrupted. For a continent that has been sort of the low-cost manufacturing base, technology is a little bit of a wild card. While we're optimistic on how it will play out, the days of low-cost labor arbitrage are being challenged by things like artificial intelligence and robotics, and it will be pivotal for Asia to be on the front end of that curve. And they have really a great start with the AI moving into China. A lot of leadership in Japan in robotics. Taiwan leads in semiconductor processing technology, but it'll be very, very pivotal to stay in the lead on technology.
Automation and investments is clearly an area that spans right across the world and offers tremendous opportunity for many companies, large and small, across the board. As you know, there is tremendous obsolescence and aging equipment around developed markets in particular. In fact, when I look at capacity utilization rates, we think that a lot of this capacity utilization is not really fit for current purposes. They are not automated, they are labor intensive, and so there is an improvement need and an upgrade need that companies are looking at. That's the first part of it. The second part of it is investments in net zero requirements around the world, particularly in developed markets, and we think that's going to be substantially more than $60 trillion.
On the green revolution, there's a lot of emissions coming through Asia right now. And at the moment, I would say that's been holding back global investors from investing in some countries throughout Asia. Typically, you'll see a lot reluctant in Indonesia on a lot of ESG metrics. But what's an inhibitor one day, other ESG people like to look for change and to invest and help drive change. And in this sense, there's a lot of potential, pent-up potential throughout Asia. So climate will be a huge, huge issue. Asia is very much impacted by climate, and we're going to see a big response to that in the years ahead.
In terms of the bottom-up fundamentals, it is no difference from our traditional credit or business analysis. But of course, like in terms of the ESG or greener investments, clearly we have seen many sort of traditional companies, for example, power and energy sectors, that company are traditionally relying the coal or fossil fuel generation, now moving more towards to renewable or greener energies. I think these actually offer opportunities for us as an investor to look at those space, and we have seen company have more sort of long-term infrastructure capex investments in this space that will allow us to participate in this ESG trend. Together with the traditional credit analysis, PineBridge always believe that with company have focusing on the ESG element that will benefit the company as well as the investor in the medium to longer term, because this company will be able to sustain in this sort of environment or investment cycle much better than the company that are not focusing on this area.
Now, if you look at Asia affluence, now, that goes right across the board from consumerism to investments in technology and, of course, the industrialization that we all expect within Asia itself, particularly in countries like India.
Post-pandemic, many companies and countries are looking more in terms of the diversification, in terms of the production chain. This major theme, I think, will drive the investment proposition in the Asian bond market going forward. We have already seen Southeast Asian countries joining this growth momentum by more investment in terms of their infrastructure, manufacturing base, and MNC moving their operation in other countries outside China. So clearly, there's opportunities for fixed income investor.
Well, valuations are driven by interest rates as much as competitive forces. And as you know, over the last 50 years or so, interest rates have been declining globally. And we think, of course, now with so much liquidity in the market and the intentions of big central banks around the world to pull back on some of that liquidity, interest rates are more likely to rise than even stay stable at these levels. So that'll affect valuations around the world. But of course, that means that this is much more of an alpha market than a beta market. And if you layer on the competitive forces of disruptive technology, it makes it that much more of an alpha market. Now, it's very important to be locally based, to be on the ground in terms of finding those right companies. And we think that, there are tremendous opportunities for companies in Asia, given the competitive advantages that Asia has built through R&D over these last several years. Now, turning to some of the index compositions, there's going to be a much bigger dispersion in returns and a much bigger gap between the winners and losers within the indices. And of course, if you look at some of the opportunities that are coming out, particularly in countries like India, just year to date, there have been 24 unicorns with over $1 billion of market value that has been created just this year. So there's tremendous amounts of disruptive beneficiaries that are likely to be coming to the market as well.